good to see you today. Thanks for being back with Adam, Lee, and I. I'm Jake Weatherford here at Castlepoint Wealth Advisors. So today we're going to talk a little bit about recessions. I was in a meeting with a fellow advisor, not from our company, but from another company, and a good friend of mine yesterday, and he said something to the effect of, "Hey, I'm sure a recession is coming." And I looked at him and I said, "I'm sure also." And to that point, Adam, really, my point to him was, we should always be sure that a recession is coming if we're not in one, right? These things are scary, and the word recession, we always hear it on the news, and it can often even just be a big scare tactic. But, right, just like a market cycle, we have economic cycles. So if we're not in a recession, surely one's coming at some point, right?
Yeah, absolutely. And reminds me of the phrase, even a broke clock's right twice a day. It's kind of like if you're predicting a recession and you don't say when, you'll be right eventually, right? I mean, we have recessions regularly. We've had like 8 recessions roughly in the last 50 years, a couple in the 70s, a couple in the 80s, one in the 90s, 2 in the 2000s, and one recently with COVID. We have recessions all the time, and anybody that has a long-term investment plan, so this includes retirees, really anybody who's potentially going to draw from that portfolio for, I'd say, 10 years or more, you should expect a recession in that time period, and the portfolio should be built such that any day we are ready for a recession and we are ready to consult with that client on the implications for their plan. But really their plan should be built to weather recessions, because we know they're coming. We don't know exactly when, but absolutely they're coming. Shouldn't be scary.
Yeah, and that's really the key. And we oftentimes will even say, hey, look, our superpower is our time horizon. So we build plans such that they can absorb these recessions, and we also have to think about what we're going to do at the top of a market cycle, of an economic cycle. It's not just the bottom that's hard. A lot of times the top of market cycles are difficult on people because they're saying, hey, is this thing going to go any higher? Should I sell out now? And that's a way to ensure that you introduce other types of risk in your portfolio by going to cash, and then you have inflation risk, and that's certainly not a good thing for the portfolio long term either. So on the recessions, just like you said, we know one is coming, but if you don't say when, sure, you're going to be right eventually. And I think the other key point on that is that really no one knows when. Mm-hmm. So that's why the plan is so important. We have to plan for a long term, and we have to set it up such that we can absorb these types of things. But give us a little bit, on returns over the past 20, 30 years, and how many recessions were in there roughly.
Yeah, so we had, I'd say over the last 50, we've had 8. And so I guess you chop the 70s and 80s off there, depending on when you draw the line, maybe we had 4 or 5. We've actually, the period from 2008 to most recently, right after COVID, that was, I think, probably the longest bull market we've had in the last 100 years. So we've kind of been conditioned maybe to think that recessions are less common than they really are. It's kind of normal to have one every 5 to 8 years. Consistently, you look at almost any rolling 20, 30-year period over the last 100 years. The longer period you look at, the more it kind of reverts back to mean historical returns, which I don't want to say mean, sorry, it's a technical term for just saying average historical returns, around 10% for stocks, around 3 to 5% for bonds, depending on the credit risk you're taking and the duration. And so that would really be the point is the risk is not a recession. The risk is a short time horizon where something like a recession can impact you. It's kind of like if you're in a commercial airliner at 40,000 feet, you hit a little bit of turbulence. It's not a big deal. If you hit it right when you're coming into land, it is a big deal. And so, we need to make a plan when we're at 40,000 feet. And that's what we do as advisors, so that we can fly through the recessions, because we know they're going to come. Just like in an airplane, pilots will try to avoid it. Sometimes you get hit turbulence, and you need to have a plan that's robust to that.
Well, and to your point, if we don't have a long time horizon, typically what people should do, or typically what people can do, is to avoid having so much stock in your portfolio.
Absolutely.
If your time horizon is short, let's say it's less than 5 years, let's say it's less than 3 years. I want to buy a house in 2 years with this amount of money. Well, we're not going to include very much stock in your portfolio, and maybe you shouldn't either because of that. That's when we look at things like fixed income or even treasuries. That's some ways that you can manage going into a recession or thinking that there might be a recession. And again, we know that those things are on the horizon, so that's what you should be managing. but you also have to balance out the other side of, if I do have a long time horizon, then maybe I do need an asset that produces me better long-term returns.
Yeah. So one last point I'll put on that, not to make this too long-winded, but just remembering the difference between a recession and the stock market going down, because stocks, everybody's trading them all day and everyone's making predictions all day, and so stocks tend to have changes in value before the events actually happen, right? And so we look back through historical examples. Stocks markets tend to bottom and start recovering sometimes before we even find out a recession happened, and many times before the bottom of the recession. So even if I told you, hey, a recession's starting tomorrow, stock market's probably already going to be down. And even if I tell you, hey, tomorrow is going to be the very bottom of the recession, stocks probably have already started recovering and may even be already past all-time highs, because everybody else realizes already it's the bottom too.
Yep. And it's easy for us to kind of commingle the two, the economy and the stock market. And those are two very different things. We've spent a little bit of time on that. We could spend some more time in a future video. But we'll end this here. Thanks for watching. Is a recession coming? Sometime. We just don't know when. Have a good day.